Hello, good morning. It's Friday the 18th. I'm FX Plu. On foot this morning as old Storm Eunice is heading this way. It's rather windy and I didn't fancy getting blown off the airwheel this morning. But anyway, I want to talk to you a little this morning about Gerard Lyons. If you're unfamiliar with the name, he's a former economic advisor to Gordon Brown and to Boris Johnson. So he's got good form and he should know what he's on about, right? Well, anyway, yesterday he piped up blaming Governor Bailey for making the situation with rising inflation in the UK materially worse. Shots were fired. He said that the bank's failure to act before December has set back the recovery. More seriously, he fears that this has placed the country in danger of falling into recession when trying to catch up that inflationary curve. The risk is increased when coupled with the rise in the cost of wholesale gas and the rise in national insurance contributions that are coming in soon. He also took aim at the Bank of England's forecasting, which he says has constantly downplayed the seriousness of the situation. He held back from using the same kind of rhetoric as your good friend and mine, Nat Payne, so there were no allegations of lying or manipulation of official data, but those two, they're peas in a pod. Certainly cut from the same cloth, that's for sure. But meanwhile in the market, sterling remains range bound between about 135 and 136.50 against the dollar. We open around 136.15 this morning and 119.75 against the euro. And over in the US, there is growing speculation that the Fed may deliver an intra-meeting rate hike. The most recent inflation figures confirmed inflation is continuing to rise, but there were no real surprises to the upside there. As such, any hike before March 16th could be counterproductive for the central bank's reputation. It could lead to accusations of panic, and we don't want to see that now, do we? But many believe that the Fed is falling behind the curve. Some analysts are even calling for 100 basis points of rate hikes, a full 1% before July, in order to catch up and help bring inflation under control. Clearly those calls are from those less concerned with the underlying risk that such aggressive rate hikes could ultimately cause a recession. But hey ho, there we go. We'll just have to see how things play out stateside. For the time being, the dollar index continues to drift along, lacking any real drivers at the moment. Yesterday it was virtually unchanged, around 95.85. And euro dollar this morning, that opens around 113.70. Right, well that's it from me. It's a blowy old day today, hence the mess of hair and makeup. But I'm glad for my barber, and if Bertie's around, he's glad for his little barber too. Have a great weekend, stay safe, join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.